So we all know that stock market is really doing well, and I've been advising you on which sectors to invest in as the market was climbing. So today the market has done very well, and it is expected to do well for some time. So as I told earlier that pharma, IT, gradually hospitality also picked up, tourism also picked up. So these are the sectors to watch out for. But just an update, just a check on the sectors where you should invest. Then I would like to add something that you can now look at PSU banks. Okay, now I know that PSU banks are known, not to do that well, and they are a kind of investment which gives you something in some years time. So, when you have your investment in IT, pharma, and logistics, I told you last time, because vaccine is almost here now, and it would be now transported, across the country and across the world. So, for that reason, logistics and transport related shares and also the ancillary sectors related with that, they would be hot. But why I'm talking about PSU banks is that because there should be some shares in your kitty which yield results in some years. And one such stock to watch out for is SBI. SBI Bank is being advised by many experts to invest in. SBI has been a dependable bank for the government and also for investors, and it has been doing if not well then okay, and it is expected to do well in another 2-3 years. So you can look out for SBI bank shares as a steady option in your kitty. Like there are some options in the kitty which are top performers, which are racers, which move ahead because their time has come, and then there are some laggards. The SBI can be in between, so you can invest in SBI bank, and other PSU banks I would not advocate that much, but you can also look at other PSU banks after seeing their performance for at least a month. So SBI can be a mid performer for you. Also, I would like to say is that you can start looking at cement sector and infrastructure and real estate sector. I said this in July also that you can look at this sector, but it is now that it is gathering steam. There may be a dip in the stock market in coming times, but as I always say, never look at a dip from a negative perspective. Dip is a time where you can invest money. So you can also look at the cement sector because it is also expected to do well as more and more money comes in the infrastructure sector. And I told you earlier also that some 8 billion US dollars are likely to be invested in the infrastructure sector. So you can also look at this sector if you're planning for a mid-term investment. And as I always say, this is not the time to invest in penny stocks. However lucrative they look, however attractive they seem, don't invest in penny stocks as of now if you are a common man or not a very khiladi kind of a player in the stock market. So don't go towards penny stocks at the moment. Also, one more sector to watch out for is IT sector. IT is a top performer sector these days, and my experts believe that it will remain like that for some time. But you have to be careful and watch out for which companies are investing in the IT sector. So there are some top companies where you can invest in, but of course their shares would now be very expensive. So whenever there's a dip, you can go for top performing sectors like IT, pharma sector, logistics sector, um, which is FMCG sector, because FMCG is also likely to do well. So these are some sectors where you can park in your money and you can have a hybrid profile. And as I always say, keep some money for metal stocks like gold and silver. So I've given you a lot of options, to think about, but always keep a watch on the stock market before investing.